Welcome to Mr. K's Connected podcast. This podcast series will help you understand the precious metals industry, the background, the future thereof, as well as the factors controlling its fluctuation, empowering you to build long-term wealth. Before we dive in, remember you can find the accompanying blog to this episode on our website at www.mrk.co.za. Mr. K, pure and precious metals. Now, let's begin. Hello everyone, and thanks for tuning into our very first episode. We hope to inspire you and give you some valuable insight into the market in the journey to come. You can expect our podcast every second week going forward. Watch our socials for updates on new releases. So, without further ado, let's dive in. It has been a softer week for gold, having fallen from $1,830 mark to around $1,790. It would seem the metal has tested a resistance level of $1,830 and simply could not breach that. At this stage, therefore, the market has been drifting with little fresh incentives for investors to buy sufficient quantities to raise prices. This comes on the back of conflicting economic data, which shows a slowing in global growth, and US growth as well, which may delay interest rate hikes. This is what I would call ambivalent signals, which show little real direction. Silver too has had the same characteristics, although its price has held up a little better since it has an industrial use component which often acts to suppress any softness in price. Still, the inflation fear is very much there, and if this does become a problem, traders are not taking long bets on gold at the moment. It is keeping the price a little softer. There has been some movement upwards in the price of oil and also platinum, with continued fears of supply chain pressures, which moves inflation upwards. These factors are generally not good for gold price rises. It is this battle between a view on inflation and whether interest rates can rise that is just not moving markets. One should always remember that there are some weeks where a lot happens and others where there is little action. This week is likely to herald some new data on US consumer prices, which will be another indication of whether inflation itself is worrying or not. Of course, there's nothing wrong with a quieter market, since Americans have had a long weekend and are still battling the Delta surge. And prices have been pretty steady for the last month, with some positive movements amongst the downs as well. For a South African investor, this week's prices are set to confirm the trend we have spoken about. We are seeing slightly lower gold prices and, at the same time, a strengthening rand. Therefore, at the time of writing, the opportunity to buy into a USD-denominated investment, like gold, is even better. The ZAR has been, remarkably, one of the world's strongest emerging market currencies over the past week. And this is yet another window of opportunity for local investors to use fewer ZARs to purchase metals. Ironically, the USD has been stronger, although not against the ZAR, and this has made gold more expensive for many developing market investors. A relatively quiet or uncertain week awaits, with the price likely to remain at lower levels and waiting for more direction. Please consider sharing this episode with anyone you think might benefit from the information therein. For more information on our bullion products, visit our online store, where you can find the full range of Krugerrands and bullion bars on offer. We also buy gold, silver, and diamonds with an easy and transparent process. I look forward to connecting with you again soon. Until next time, have a golden day.